Why do credit acquisition companies in Cyprus hold so much debt, and how did it get so high? Let's take a look. My name is Fiona Mullen, and I'm the Director of Sapienta Economics. This is being recorded on the 25th of February 2026 and will be published on the 27th. Now, the issue came to the fore in the past couple of weeks when newspapers started reporting that non-performing loans, or NPLs, also known as non-performing exposures, or NPEs, were worse than the financial crisis in 2013. And yet at the same time, we had reports that NPLs in the banking sector, which is an important distinction, were below the EU average. So what's going on? Now, if you've been following Cyprus for some time, you will know that once upon a time in 2013, we had a massive banking crisis in Cyprus. The banks were closed for 12 days on the trot. We didn't know if we would ever see cash again. And at the end of it, we had the still unprecedented haircut or wiping out of depositors over 100,000 at Laiki Bank and a chunk of deposits if you had over 100,000 at Bank of Cyprus. People, of course, were rather annoyed about it. And partly because people were annoyed about it, Parliament took 2 years until 2015 to pass legislation on foreclosures, meaning that banks and other creditors could come and take your property if you weren't paying your debts. But it was very difficult for them in practice to come and get your primary residence or your home. And to be honest, I've forgotten the first time they did it, but certainly by at least 2019 and possibly earlier, let me know if you do remember, Parliament kept removing the ability of banks and or credit acquisition companies to come and take your primary residence. Now, there are obvious reasons for that. There are stories of abuse by creditors and so on. But politicians also wanted to protect people from being thrown out on the street. These kind of protections do not exist in, let's say, the United States. But Cyprus is a small country. We really don't have much homelessness here. And although everybody knows that there were what we'll call strategic defaulters, nobody likes the idea of people being thrown on the street. So this law in 2019 didn't get implemented right away. It went to the Supreme Court, and the Supreme Court ruled in 2020 that it was okay, that legislation to protect primary homes was constitutional. But the law kept getting suspended anyway. Here we are in March 2020, COVID, all loans were suspended. And then it keeps being suspended essentially up until the presidential elections, which were held at the end of February 2023. But even after those elections, they were suspended again until the end of 2023. And I don't know if I've even caught all of them, but MPs are now calling to suspend them again because in that little window when banks and credit acquisition companies actually could take primary residences, they've obviously made the most of it. So you can see figures of foreclosures on primary residences going up rather quickly. But I think that's quite probably, like I say, because they were unable to do it beforehand because it was suspended on and off for such a long time. But now here we are, a few months away from the parliamentary elections in May 2026, and it's put the politicians in a panic. But let's get back to the question at the beginning, which is how did the debt held by credit acquisition companies get so high? Before I get to that, let's start with how much the credit acquisition companies hold. The most recent publication from the Central Bank of Cyprus shows that they held 19.7 billion euros in NPLs at the end of June 2025. This is the original in Greek. And of that, 18.5 was non-performing loans. This is what I prepared for paying subscribers to Sapienta Country Analysis Cyprus, my flagship monthly report. And now, thanks to the leaky parliament, we are told that this has reached 25 billion. Okay. Now let's get back a bit to history to see how we got from where we were to where we are today. So back in the bad old days, when Parliament hadn't passed any laws on foreclosures, even for plots of land and so on, non-performing loans peaked at 28.9 billion euros in February 2015. That's more than 1.5 times GDP at the time. And just as an aside, you might have heard that NPLs peaked at 13 billion or 15 billion. This is normally people talking about 2013, but they actually climbed a lot after that because we had a nasty recession and because as I mentioned, there was no law in place to incentivize people to pay. And you can see from the quarterly data, the March data, that the problem was mainly with households, but also with construction. It's a very dangerous position to be in because the regulator, effectively the European Central Bank, when you have a lot of bad debt, the regulator can turn around and say, because we've got weak legislation, we don't think you're ever going to get these loans back. And so we want you to value them at zero or next to zero, right? So without going into too much geeky detail, that affects your profits, which affects your capital, and it can bankrupt your bank. And that's essentially what happened to the Cyprus Cooperative Bank. There are, of course, many reasons why the Cooperative Bank got into that state, but that's not a topic for today. So from 28.9 billion euros in February 2015, the banks have got their bad loans down to just 835 million at the end of December 2025. Households are still the biggest problem, but it's under $500 million now, okay? Nowhere near as bad as it was 10 years ago. So there are two ways in which the banks got rid of bad loans. One was through organic reduction, as is known. That's people starting to pay again or restructure their loans so that they can get back onto a paying schedule. And then the second way is sales to credit companies, credit acquisition companies. How many loans did the banks sell to credit acquisition companies at the beginning? So the good people at Stockwatch did a table back in 2020, and they listed a number of the sales that had taken place. So what I did was I took that table, I cross-checked numbers and so on, and I added financial statements and so on from 2018 when they started all the way up to December to come to a figure for what they'd done. So I had contractual value, I had the gross book value. Contractual value is the amount by which it has been cut. And although we haven't got Eurobank data yet for the fourth quarter, I did add in the very latest from Bank of Cyprus. So the answer, according to my adding up of all these different reports since 2018, is that the banks reduced their NPEs through sales by about 14 billion. So 14 billion of that 28 billion euros was done through sales. But just to repeat, the banks got rid of about half of their loans through sales. And because we know that NPLs are now under 1 billion, pretty much the other half was through organic cuts, okay? So how do we get to banks selling 14 billion of loans and their credit acquisition companies holding 25 billion? Nobody produces public data on the details. I really think they should, because as long as we don't have transparent information, members of Parliament are going to keep nagging about this issue, and it will ultimately be bad for both the banks and the credit acquisition companies. Already the credit acquisition companies have issued statements saying that the statistics are misleading and so on. Nevertheless, in the absence of full data, I have concluded that the answer has to be that the CACs, the credit acquisition companies, have piled on a lot of charges and interests to that original 14 billion that they acquired between 2018 and today. So let's calculate what I'm calling the effective interest rate, by which I mean interest plus all the charges. What have the credit acquisition companies been charging on non-performing loans that they have required? So how did I do this? It's a bit of number crunching, of course, but basically you take the acquisitions in each year, which I have been recording, then you apply an interest rate in each year to the cumulative amount, and you keep playing with that interest rate until your value pretty much matches the actual data reported by the Central Bank of Cyprus. So at the end of 2024, it's 20.3 billion, okay? 20.3 billion euros. And what interest rate do you need to get to 20.3 billion by the end of 2024? The answer is 12.5%. And if you keep applying an interest rate of 12.5% to 2025, you don't quite get to the 25 billion euros leaked to the media. I get 23.4 billion. But given that politicians like to exaggerate, I'm still happy with this estimate. So let's see how much banks charge for outstanding household loans. They only charge, at the moment, 3.5%, according to the latest central bank data. Now, of course, if you fall into arrears, you're going to get penalties, you're going to get additional interest put on. All of this exists to try and encourage us to pay on time. But I think it's interesting to see the large difference between the two. So bank average interest rate in a single month, 3.5%. My calculation for the effective interest rate since 2018 applied by CACs to the loans that they have acquired is 12.5%. So that was a lot of statistics. To summarise, bank non-performing exposures, NPEs, peaked at 28.9 billion euros in February 2015. They sold just over 14 billion to credit acquisition companies, CACs. Those credit acquisition companies now hold between 23.4 billion euros and 25 billion euros of debt. And this seems to suggest that they have accumulated between 9.4 billion euros and 11 billion euros in charges and interest, which translates into an effective interest rate, as I'm calling it, of 12.5%, according to my calculations. And moreover, this is before taking into account any reduction of non-performing exposures held by the credit acquisition companies. So the effective interest rate could be even higher if they have actually reduced some bad loans, which according to some media they have done. So what are my conclusions from this? Really, my number one conclusion is you need transparency, because without transparency, you just get members of parliament in a panic, putting pressure on the government to change legislation. And ultimately, that's bad for the profits of credit acquisition companies. It's also bad for banks, because people just read headlines saying NPLs are bigger than they were in the crisis, and they assume it means the banks. So we need to avoid this legislation by rumour. Let's get the figures out in the public domain so that people like me can verify them, and so that we get legislation that actually works for everybody and is based on real, hard data. So my final conclusion is transparency is what we need. It's good for governance, and it will be good for everybody involved, including those who are at risk of losing their homes. That's it from me. This is my shameless plug. The reason I could talk about all kinds of Cyprus topics, the economy, the gas, the electricity, the Cyprus problem, the banking sector, and the economy of Northern Cyprus, and is because every month I do a deep dive into 6 different sections of the Cyprus economy and Cyprus politics. It's pretty much everything you need to know about Cyprus if you are based here, or if you're an energy operator in Cyprus, or a shareholder in the Cyprus banks, or if you're thinking of moving your big tech here. You really need an independent view that isn't affiliated to any political parties and who can, as it were, tell you how it is, while I hope still remaining respectful. Thank you for listening.